Good day everyone, welcome back to this new video. It is your boy once again, Legit Paul, and I'm back with another video. So guys, as you saw the title, this is the risk management strategy that I've been using for quite a long time now, and it has been it has been good for me. It has been very good for me, and surely it's going to be good for you too. So guys, I've seen the problem. I've seen the problem. You might, in trading, I've mentioned it on my Instagram post, whereas I said that technicals, meaning all your analysis and all those kind of stuff, you analyzing the market and knowing that the market and anticipating and also forecasting that the market can go into this direction, it's just 10% of trading. It's just the 10% of trading. Then when we speak about the 90% of the trading, we speak about the psychology of the trading, we speak about managing your trades, and we're speaking about also like the risk management you're using. How to manage your trades is one of the biggest challenges people are facing today, and also the fact of your psychology, your mixed psychologies. So with this risk management strategy that I'm about to actually educate you with, it will help you also to be able to reduce the emotions that you are facing, for you to become more comfortable when trading and to have much confidence when taking trades, which is one of the most important things that you need. You don't need all those stresses of being able always checking your phone or always checking your laptop onto how are your trades going. Are they in profits? Are they in losses? And you have closed your trades too early, or your trades too late. So it's one of the things that I'm about to actually educate you with closing your trades early and late. Those ones are in the also strategy part. Those are in the strategy part. But knowing also that you must have confidence, you must have patience. You must have patience. After analysis, you must know that I'm going to use this risk management strategy, and I'm not going to take partials when my trades are on here and all those kind of stuff. I know that partials are one of the important things that you need to learn, which I'll be including it in some other videos, and I might also not include the different types of your targets and all. But for now, I'm just gonna educate you with risk management strategy, which is one of the most important thing and one of the things that people are struggling with today. People are succeeding, and you find that the only problem is just your risk management strategy. So we have this tool in TradingView, guys. We have these two tools. Okay, let me just put them over here. We have these two tools. Okay guys, so in TradingView we have these two tools. Okay, we have these two tools. I hope you can see them. And again, it's a bit rainy outside. It's a bit rainy, so there's a lot of noise, and please don't mind the noise out there. So that this tool is for a sell. So when you go short, this is for a sell, and this is for a buy. Okay, when going long. So in CrowFX, we mostly target a risk ratio of 1:5. Okay, of 1:5. So I'll explain very well what do I mean when I say 1:5. So our minimum target is 1:5. Okay, minimum target is 1:5. Okay, that's CrowFX minimum target. So we'll just put this one aside. So guys, we have these two tools in TradingView. This is for when you're going short, and this is for when you're going long. Over here, as you can click this, we can see that inside of this middle part, which we can say it's a part of its equilibrium when we go into some Fibonacci's and all. But on this middle part, we can see that we have some risk reward ratio. Then it's written 1. Okay, then over here we have some stop and percentages and all, but we're not going to mind a lot of details. There's certain stuff we're just going to look at into this part. So on this one, we go on this part, we're going to look at on this digits only, which is the digits that are going to tell us how many pips are we taking actually. You will see what I'm gonna do. You see it's extending now. It's how much? 73 pips. Then it was on what? It was on 56 pips. Okay, so you can extend it and it's just going to go up, or if you do taking it down, it's just going to go down. It just tells you the amount of pips you're taking. And onto also this bottom one, you're just going to focus on the same one, whereas it's going to tell you the what, the points, actually the pips of your target, and this is the pips of your stop loss. And on the long one, these are the pips of the take profit, and these are the pips of the stop loss. Okay, then on this middle one, we have some risk reward ratio, which is 1, and this means 1:1. And also on this one, it means 1:1. So I'll just go in depth of what does that mean. So let's just remove this for now. Okay, so guys, let's start with the first rule. Okay, we're just going to go with the first rule. The first rule is risk maximum 1% of your account. Okay, 1% risk, risk maximum 1% of your account. Okay, risk maximum 1% of your account. That's one of the first rules. That's what we also like. We place a lot of focus onto it in ProFX. We only risk 1% of our account and nothing more. You get me? But you can go lesser, but nothing more. We just risk maximum 1%. So by me saying that risk a maximum of 1%, what do I actually mean? Okay, in terms of risking 1% of the account, you're just going to make a bit of an example, saying that your account balance. Let's just do this. Your account balance is your account balance is $100. Okay, let's do this. Okay, it's $100. This is your account balance. Okay, $100. So we're saying that, okay, now you just open you just deposited $100 into your trading account. Okay, you just deposited $100 in your account, and you want to do what? Now you want to take your first trade. Okay, you want to take your first trade. So we're going to what are we going to do? We're going to look at the 1% of your $100 account. How much is 1% of your $100 account? Do your calculations over there. 1% of $100 is only $1. So your risk, you're going to risk only your risk is going to be only $1. Your risk is only $1 per trade. For every trade that you're going to take, you're just going to risk only $1. What does this mean? This means that on every account that you're depositing, you're going to have 100 chances. What the fuck? You're going to have 100 chances to trade. You're going to have 100 chances to make it your best, 100 chances to win, or 100 chances to take all those trades, guys. I'm not sure if you understand me, but you're going to have 100 chances onto the forex market and 100 chances of you taking trades. Okay, so if you can say $1, okay, for you to blow $100 with a risk of $1, 1%, it's going to take you 100 trades of you losing. 100 trades of you losing. This is when you're going to lose how much? You're going to blow your $100 account. I'm sure wherever you are just happy. You are just happy to hear this. Oh my God! Wow! Oh wow! I'm having 100 chances. Yes, you're having 100 chances. You know. So let's just get into depth of everything. Okay, let's just get into depth of everything. So we're risking only 1% of your account. So now, surely you're asking yourself, how am I going to calculate this 1%? How much losses? So, and I want to also mention one thing, that by you risking 1%, $1, it will determine how much lot size you're going to use. This risk management strategy will determine how much lot size you're just going to use on this. Okay, so I just want to go to the live chart and show you actually what do I actually mean by risking 1% and all those kind of stuff. Okay, so let's just go to our charts. So on our charts, we're looking at USD CAD. I entered USD CAD and it has hit my take profit. Okay, so the stop loss is quite big for this time, you know, but I was willing to, and it was according to my risk management strategy, so I can't go over there. It's like my trading plan. So we're just going to take here. So we had a trade on USD CAD, guys. As you can see, this trade hit my target. Then let's just first look at this part. On this part, we can see that my stop loss was only 11 pips. Okay, my stop loss was only 11 pips. Okay, then over here we have risk reward ratio. My risk reward ratio was 14,55. Okay, this is 14,55, and my take profit, we have how much? 100 pips. So this thing means I'm willing to risk 1% of my account, which is this part. Okay, let me do this first. Okay, so this part, it's only 1% of my account, which I'm willing to lose. Okay, I'm willing to lose 1% of my account, okay, to gain 14,55% of my account. Okay, so meaning I was willing to lose $1 if I had $100 account. I was willing to lose only $1 to gain what? To gain $14,55. I'm not sure if you get me. Don't look at the pips, don't look at anything. This is the risk management strategy. I'm willing to lose $1 to gain how much? To gain $14.55. Okay, so let's just I want to show you how to apply this and how much lot size, if you have $100, are you going to use on this. So we're just going to extend this a bit so that we may have the coordinates. Okay, so you're going to look at your stop loss, where it is at the end of your stop loss, and you're going to take the pips of it. So the pips of your stop loss is 1,27633. Okay, let me not jump into that right now because I'm a bit confusing usually. Let's just then, okay, now you want to know how much lot size am I going to use so that I may get $14.55 and risk only $1 of my account, 1% of my account. So we're going to use what you call FXTM profit calculator. You just go to Google, or even if you're using iOS, you just go there and you search FXTM profit calculator. Then the first one, you just enter on it. So here it is. This is my FXTM calculator. Let's just go to the top. You can see it's a profit calculator FXTM. Okay, then we go to our currency pair. What is our currency pair? You can see this is currency pair. We're going to choose our currency pair. Here's our currency pair, USD CAD. We're just going to look for USD CAD over here. Here is USD CAD. We click USD CAD, and what are we going to say? It's a sell trade. Okay, then let's just go a bit down. Open price. This is the open price that you're going to now you are going to back to the chart, and you're going to look for the open price. You place your crossbar over here and look for the coordinates. It's 27520. It's 520. It's 520, 27520 if I'm not mistaken. Let me see. Let's just zoom in a bit. So now we're going to enter our open price, and our open price is 524. Okay, what was I doing? Okay, 524, and our stop loss is 27 513. So basically we're going to start with our open price, which is where we entered our trade, our entry point, and we're going to then we're coming with the our stop loss, where our stop loss is only 11 pips. Then as now we've entered our currency pair, and okay, let me do this, and our sell over here, our buy or sell, and our open price and our close price, which we started with our stop loss. Then we're going to then enter our take profit for our take profit. So we're just going to now go to our deposit currency, and going to get and we're going to choose USD. So basically when you're choosing this currency, deposit currency, it's actually which currency base you are using onto your account. I use USD. Then now we come to the main part, which is trade size, lots. Then now we're going to adjust our lot size to see which one fits the criteria, which one is that we're going to use if we're going to lose if we want to lose 1% of our account. Which lot size are we going to use? So we're just going to start with 0.01. It's too low. Let's just go to 0.05. It's also too low. Let's just go to 0.10 lot size. It's also low. Let's just go to our 0.12. It's a bit low, few pips away. Let's go to 0. So this is the lot size we're going to use, 0.13, because you can see with 0.13 we're going to lose $1, and with a few digits after, which is not a problem, that one, as long as there's no digit in the first one, you know. So just going to use 0.13 lot size, and with 0.13 lot size, if our trade hits our stop loss, we're just going to lose only what, $1. Okay, so now we're going to our take profit target. So my target is over here. Okay, it's 25900. 25900. Let's just adjust here. It's 25900. Okay, if I'm not mistaken. Or 897. 897. Look at how much you're going to gain. Just look at how much you're going to gain. $154. Okay, just going to get, you get me? This is how much you're going to get, and with this lot size, this is how much you're going to get. Yes guys, this is actually how you calculate your risk. This is how much you calculate. This is how you calculate your risk, and how much you're going to know that how much you're going to win and how much you're going to lose. Okay, but the one that you must focus on is how much you're going to lose. Okay, you must only lose a maximum 1% of your account. So let's just do a bit of let's just go back to this part, and we'll just close the video from this one. So guys, saying that now, let's just do this. So guys, saying that now you have only $10. Saying that you have $10 now. Your account balance is only $10. Okay, I want to show you something that to show you that this risk management strategy actually caters for every account. It caters for every account. Okay, so the 1% of $10, 1% of $10 is 0.10, meaning on every trade that you're going to enter on your $10 account, if it hits stop loss, you must only lose $0.10. Okay, 0.10 actual cents. It's 10 cents. Okay, you're just going to lose 10 cents. You have 100 chances. So if you lose 100 trades of 0.10, actually you've blown your account. But obviously guys, it's just going to be a bit hard. It's going to be a bit hard to grow an account with just losing 0.10. So you're just going to look at stop losses of about 2 pips, 1 pip. You know, you must also you must actually take some intraday trades. You know, you must look at smaller time frames like M1 time frame and all those kind of time frames. But actually, it caters for every strategy. This is what I'm trying to point to you, that it caters for every strategy. You only risk 1% of your account. It doesn't matter how much you're going to gain, because you're just going to go with your target. The most important thing is your risk reward ratio. So what differs CrowFX to other institutions? The difference between CrowFX and other institutions. For I believe that every strategy can be profitable. Okay, every strategy can be profitable. You can apply some mastery to it and you'll become profitable. Okay, but the only difference between CrowFX and other institutions is that our risk reward ratio. Okay, it's our risk reward ratio. We might enter the same trade, same time, okay, and the same target, but our target, our profits won't be the same. Our profits won't definitely, because our risk reward ratio is very good, very good, and you can see for yourself, guys. You can see for yourselves. So they can enter and they can put their stop losses maybe above for about 30 pips. Okay, that's mostly retail strategies, which they put mostly 30 pips, and I'm taking how much? My stop loss is half the stop loss, meaning I'll make double the money that they made. Okay, I'll make double the money that they made. But it's not always the case. I'm just saying that the difference is the risk reward ratio that we use, which is what you must also have. You must have a good risk reward ratio to be able to risk to be able to minimize your losses, and also what, maximize your profits. That's the main goal. That's the main goal that you must always follow. That's the main goal you must always follow, guys. So guys, I'll be closing the video. Don't forget to give this video a thumbs up, hit that subscribe button, and also share it with your friends and family. Comment down below and tell me what you think about this video and how it has worked for you. And also, you can, if you didn't like this video, please give it a dislike, guys, so that I may be able to improve where you want me to improve. And it is your boy once again. I'm signing out. Yes sir.